Well, Edelweiss Financial is in focus. The company reported its Q1 FY21 earnings on a consolidated basis. The loss stood at 245 crore rupees for the June quarter versus profit of 132 crore the company reported in the previous year. Having said that, in the previous quarter, that's Q4 FY20, the company had reported a loss of 2,245 crore rupees. So on a sequential basis, we did see the losses narrowing down. In fact, provisions also contracted sharply on a QOQ basis. As far as net revenue is concerned, it stood at 806 crore rupees for the Q1. Well, going forward, the company expects that corporate credit would be on a declining trend, and retail assets would be the focus area for the company and the management. In fact, the other news flow pertaining to Edelweiss Financial is the stake sale of 51% in Edelweiss Wealth Management to Pacific Alliance Group. Let me tell you that PAG is one of the world's largest Asia-focused alternative investment managers, and they have agreed to acquire or probably invest close to about 51% stake for a value of around 2200 crore rupees. Well, this is the largest equity raise in the Edelweiss group till date. The company expects to complete the transaction in the next 4 to 6 months, of course subject to regulatory approvals, and they are also looking to use the proceeds to deleverage their balance sheet and for equity investments in other growth businesses. Well, as of now, the company remains well liquidated and well capitalized, but going forward, the Rashesh Shah, the management expects that post-pandemic scenario will present growth opportunities to them, and in order to be prepared and to tap onto these growth opportunities, the company has to be well liquidated and well capitalized. They also add that they have an intention to demerge the Edelweiss Wealth Management business in the next 12 to 18 months and finally list it in due course as a separate entity. In fact, not just this, Rashesh Shah also mentioned that they are looking at a group level revamp. Unlocking value is their other priority in FY21 apart from managing liquidity, leverage and asset quality. They've been able to manage all of these in the previous year, in this quarter also, and they would be comfortable doing so in the upcoming quarters and for the entire FY21. Well, having said that, he added that this time is right for wealth management to operate and grow independently, and he believes that independent partners just bring strategic focus to business and expand the growth opportunities and focus going forward. He adds that they've been guided by board to seek investment partners in the asset management and general insurance business also, and they are also finally looking to demerge the asset management business and list it thereafter. So definitely going forward, they are prepping up for all the kind of growth opportunities that are presented to them. In fact, in his interaction with ET Now, he mentioned that we have enough growth capital and liquidity post this partnership. And as far as the credit cost is concerned, they expect 1 or 2% of spike in credit cost for the total assets. Talking about the bond markets, he said they are right now really dislocated. And in fact, he believes that there are some learnings that they've made, the bond markets have made in the last 3-4 quarters, which will be crucial in shaping up and building up stronger bond markets going forward. So he believes that there are some challenges as far as fundraising is concerned for through the bond markets, but nevertheless, situation is expected to normalize going forward, and he remained optimistic of the India growth story.